Welcome to the weekly roundup for the week ending Friday, the 14th of August. Now, this week it's been the focus has shifted away again from coronavirus numbers, more towards the economic calendar and how the economic recovery is progressing. We've seen the FTSE is looking to end the week around 1.6% higher. That's adding on to gains of 2% last week. DAX is also looking to end the week around 2% higher, adding on to gains of around 2% last week. In the US bourses are also looking for a positive close on the week. We've got the Dow's looking for gains of around 1.6%. S&P, which has flirted with all-time high, it did actually touch a new all-time high of 33,088 during the week. That's also looking for gains of around 1% this week, and the Nasdaq around 0.3% across the week. So here in the UK, the big news has been the GDP release. So this week we learned that the UK economy contracted 20.4% quarter on quarter in the second quarter. So that's the quarter which was most affected by the coronavirus lockdown. Now, the UK GDP hit was much bigger than we've seen in other European countries and in the US. For example, Germany saw a second quarter hit of 10.1% contraction, and the US just shy of 10% as well. So the reason that the UK has seen such a big hit compared to its peers is basically, firstly, because we went into lockdown quite late, which meant that the lockdown was longer, and secondly, the service sector is our dominant sector, and it really is, it's worth 80% of economic activity is in that sector. So we're talking here hospitality, retailers, this is the area which has been most hit by the lockdown measures. We also learned this week that the UK labour market, although unemployment remains at the historic lows of 3.9%, we're starting to see some cracks appear in the labour market, and there are around 750,000 people have lost their jobs since the start of the lockdown period. So as the government now withdraws that job retention scheme support between now and October, we can expect to see the unemployment numbers rise quite steadily. Expectations are for unemployment in the UK to hit around 7.5%. Elsewhere in the markets, dollar weakness continues to be a bit of a story. The sell-off this week was not quite so acute, but what's happening here is the US dollar is basically waiting for further news on additional US stimulus. Congress in the US remains gridlocked, and we're moving into that summer recess period. So, the chances of a deal getting agreed between the Republicans and the Democrats appears to really be falling off slightly. So, the US dollar is looking for further stimulus, and it might not get it. Then as far as gold is concerned, gold has been a big story across other weeks. We've talked about it. It rose last week to a fresh all-time high of around $2,078 per ounce. This week it's seen a serious sell-off. It's seen a lot of profit taken. It's down around 4.5% on the week, and it did go down to a low of $1,865 per ounce. Currently trading around 1,950, so it's still quite a wild ride as far as gold is concerned. Oil, that's trading up around 2% this week on hopes that demand is picking up as inventories actually fell by more than expected. Now, as far as UK stocks are concerned, intercontinental hotels has been an interesting one to watch. They reported this week, and they also rose 4% across the week. Now, what's interesting here is despite revenues falling by half and their hotel occupancy in the second quarter, with hotels pretty much empty, they've still managed to make a profit. And this is interesting because it shows that their business model is actually offering some shelter. They actually don't own that many of the hotels they run. They use a franchise system, and that seems to be offering some support and keeping them pretty firm in what's been a very, very difficult quarter. Elsewhere, another stock that reported this week and was really a shiner for the week was Watches of Switzerland. Who would have thought? So it appears that UK consumers have been out buying themselves luxury watches in their drives, and this has actually offset the fact that there hasn't been sort of, airport buying of luxury watches. They saw revenues jump, and they've increased across the week a solid 23%. So a great one to end on there. Thanks very much for watching, and have a good weekend.